Thank you very much. Thank you very much for having me. Thanks very much for coming. It's great to be back at the Wholesale Investor Network. It's really good for us to come back here. We've been about 4 times now. It's good for us to keep the conversations going with our investors and potential investors, but also keep coming back to show the progress that we've been making and the milestones that we've been hitting. So what we do is quite simple. We're looking for high-yielding Australian commercial property and structuring that in a low-risk fund structure so we can provide higher than 10% income returns to our investors so they don't have to put up with the low term deposit rates that the banks are offering at the moment. So what is the Deltine Motel Fund? It's a fund. We're on the journey of buying 50 regional motels across Australia. It's a very fragmented industry with a lot of upside. There's a lot of independent players that struggle for scale and have subpar expertise. The consolidation strategy is quite simple. In Australia, it's been done many times. It's a well-worn path. Pubs have been consolidated, childcare, caravan parks. The buy and build strategy centralises costs and creates efficiency, and therefore creates upside for investors as you get those efficiencies. With regards to motels, why motels? It's quite a different sector to go into, and that's the opportunity. It provides diversification to your portfolio because it is quite different, but it also is something that flies under the radar that not a lot of other investors are looking at, certainly not institutions. We've chosen the motel sector because they're great buildings in central locations. You always find a motel in the centre of town on the main street. The ones that we're buying have a track record of profitability and repeat customers and high yield. Purchase yields in this segment are actually greater than 10%, so that's where half of our return comes from, and that's where the income return comes from. Upsides are available through consolidation and efficiencies. The best thing about this is we're not looking for the glamour of the Gold Coast glitter strip. We're looking for resilient motels in regional hubs that have diverse economies. We're not looking for the tourism dollar that fluctuates year on year. We're looking for places like Tamworth and Seymour and Bendigo and Orange, places where there's a diverse economy and these motels provide essential services to those locations. And the last bit is you can get diversification in this industry. So the investment strategy is to buy 50 motels over 5 years. We've started on that journey now already. The target acquisition size for the motels are between 5 and 15 million, and that's the sweet spot. Above 20 million is where institutions play, so we want to go under the radar of institutions, and below 5 million is your mum and dad run operations, and that of course too small, don't have the scale for us. And the sweet spot is in the middle, and that's where we get the high yields because it flies a bit under the radar and it's in that middle area. We have a very good operations team, so the revenue management team explores a lot of good distribution, promotion, distribution through the online travel agencies and global distribution services. We get better rate, better occupancy, and we also save on costs through the consolidation process. And then the final piece of the strategy is to exit in 5 years' time as a platform. Having 50 motels together, we can get the platform premium because now it's a $500 million business, and therefore it's much lower risk with a diverse income stream, so we can play that yield compression. Buy at 11% yield, sell it at 8% yield, and you get that capital growth at the end. So the priority number one for us is low risk, is capital preservation. It's important for us. This is where we've got our money as well, and this is an important piece of the puzzle. That's what we want. Property backing. We want low debt, low LVR, so the target LVR for the fund is 45%. St. George Bank provides us with our facility, so they love this segment. They've got a dedicated accommodation team. Of course, diversification is available, all towns and all states in Australia, and that provides a very good risk mitigant throughout the portfolio. As I said, resilient operations that ride other fluctuating economies because these are service providers to these segments. A lot of the customers are repeat customers like engineers and nurses and doctors and lawyers and training providers, also salespeople are coming into these local towns providing their services to the local businesses. And as the economies in the local towns grow, so does the demand for this service. We importantly have we have an independent trustee and AFSL oversight. I'll show you more about that in a minute. And we exclude high-risk properties. So we don't do development. We don't do greenfield development, no turnarounds. We're not interested in large food and beverage operations, just very simple accommodation. The advisors we work with are important to us. They provide a level of diligence and rigour in the work that we're doing. And the governance layer is very important to us as well. So Bentley's a national accounting firm, is the independent trustee in the fund. They do the fund accounting, fund administration, and provide the AFSL. Very important oversight into the operations and the investment activity. So the second most important thing for us is the return. A lot of people say, well, 20%, that sounds too good to be true. But when I break it down, it sounds a bit more achievable. Obviously, when you're buying a property at 10% yield, we provide 10% income per annum. We're halfway there already. So the first 3 months, we usually see a 10 or 15% upside in the revenue and a bit of a decrease in expenses, and that provides more return. The holding year is 5 years, and so we have capital growth over that period by increasing our room rates every year. And then, as I said, the exit provides the remaining part of the return when we get that yield compression on exit. So the portfolio that we have at the moment, the Seymour Motel, is a cracker actually. It's right next to the Puckapunyal Army Base, so we have a lot of repeat customers a lot of civilians who service the Army Base aren't allowed to stay on the base because they haven't got security clearance and they need somewhere to stay. So the Seymour Motel is the best motel in the town, and it's full Monday to Friday with corporates, and on the weekend we have out of town visitors from Melbourne visiting the Goulburn Valley. We bought that at 10.4% yield. We've owned that now for a month, and we're already seeing an uptick in revenue year on year. The property we're raising money for now is a Tamworth property. Now, all the properties are in the same pool, so when you invest in the fund, you get exposure to the pooled group of assets. This is the next acquisition. We're raising $5 million. Applications are open now, minimum of $50,000. Now, we're buying this at a purchase yield of 11%. It's a great property, service apartments. As you can see, beautiful quality of property, 22 serviced apartments, and because they're serviced apartments, the average stay is longer, about 7 days, so therefore we have lower operational costs, on-site management and cleaning costs, and therefore high profitability. We made headlines recently in the AFR. You can contact us for that story, but it really highlights the trend now that you're seeing in the motel sector coming back into the fore. Just quickly about the team, obviously myself, David Toomey, I'm the CEO. I want to point out Michael Jones, he's our Chief Operations Officer. He's the CEO. He was previously the CEO of the Townsville Casino and Resort. He grew that over 7 years from 300 staff and 100 rooms, and the casino redeveloped everything to 300 rooms, over 1,300 staff. He's an excellent operator. He's doing a great job with us at the moment. So we've got really fantastic team around us and some superstars of commercial property and hospitality consulting on our advisory board as well. So with regards to the market, it's a fantastic market for this at the moment because high construction costs are limiting new supply. The Australian dollar being low brings more international visitors into the country, but also encourages Australians to stay into the country. And as we've heard many times throughout the couple of days here, there's a lot of spending in infrastructure and economic growth going on in our regions, which there's combined to provide the perfect storm for the demand for these places. So thanks very much for your interest. Thanks very much for your attention, and we'll be here all day if you'd like to come and see us. Thank you.